Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, November 4th, 2008, Election Day in the United States. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 in Bermuda, and 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, phone in toll-free at 1-866-667-CATEX. If you're overseas, our AOL Instant Mail address is CATEX TV. On this day in history, in 1979, 29 years ago, the Iranian hostage crisis began when Islamic militants rushed the grounds of the American embassy in Tehran, taking the whole embassy staff hostage and beginning a saga which ended up in the defeat of President Carter in his re-election effort in 1980. Today's birthdays: First Lady of the United States, Laura Bush, is 62 years old today, and former newscaster Walter Cronkite is 92 years old. We have one breaking story. It's economic news. U.S. September factory orders were down sharply for the second month in a row. U.S. and foreign businesses sharply cut back their demand for capital equipment for the second straight month in September. Factory orders fell 2.5% in September, much weaker than the 0.2% decrease expected by economists. Factory orders had dropped 4.3% during the month of August. The stock market doesn't seem to mind. It's up about 285 points right now as we start the news. In some very big news, Swiss Re, the world's biggest reinsurer, shocked the stock markets this morning by slipping into the red in the third quarter of this year as it incurred losses in investments owing to financial market turmoil. The group's bottom line was also hit by further mark-to-market losses booked during the period, as well as higher cat claims. The term mark-to-market, of course, refers to an accounting rule requiring the value of assets to be aligned quickly with market values, with the result that in a plunging market, assets may have to be written down to such an extent that they seriously weaken a company's balance sheet. Swiss Re's net loss for the period reached 304 million Swiss francs, or about 285 million US. In the third quarter last year, Swiss Re posted a profit of $1.5 billion Swiss francs. The CEO of Swiss Re, Jacques Aigrand, said that as a consequence of the high volatility in the financial markets and a significant increase in client demand for reinsurance, the company is now suspending its share buyback program. The news sent Swiss Re's stock diving about 7.5% in Zurich this morning. It eased up a little bit. As of right now, it's about 1.5% higher. An analyst for Bank Vontobel issued a bearish note following the results, saying his bank believes worse is to come in the fourth quarter, despite the numerous hedges in place to protect the investment side. The CFO of Swiss Re, George Quinn, however, tried to reassure investors, saying, "We have significant excess capital. We feel confident about it." Swiss Re's earnings have in the last few quarters been dented by the financial turmoil globally, and it's also been forced to make substantial asset write-downs on its derivative holdings. Also, it's posted net investment losses of 572 million francs for its life and health division due to higher mortality in North America. I don't think we know about that, and we're in North America. Its return on investments was also hit by mark-to-market losses of 289 million francs for structured credit default swaps. Analysts at Bank Wegelin, another Swiss bank, said the reinsurer is bleeding exceedingly, and an end to the bloodletting is not foreseeable because in October, too, it forecasts a mark-to-market loss in the credit default swap positions of almost 200 million francs. We've been reporting on the problems up at the Hartford. Finally, some good news. The Hartford Financial Services Group saw its battered share price rally by about 58% yesterday, all the way up to $16.28. This is after it clarified its capital position in an SEC filing. In the filing, as we reported yesterday, the company said that its expected capital margin by the end of this year would be $2 billion in excess of the level needed to maintain its AA rating. Meanwhile, at that level, it said its life insurance business would have a risk-based capital ratio of 440%, which is 115 points above the level it needs to have its AA rating. Hartford also added that it can utilize its Glen Meadow contingent capital facility, and its estimated capital margin does not include any drawdown on its $1.9 billion revolving credit facility. However, CEO Romney Air had some bad news. This was reported in the Hartford Courant. It said that it will lay off 500 employees, including about 125 in the Hartford region. This will be the first wave of job cuts, and that more layoffs will likely follow next year. The Hartford, of course, is trying to cut its expenses by saving $250 million in annual costs by the end of 2009. The company said yesterday that 500 workers around the country in their life and P&C insurance operations will be notified by the end of this month that they'll be laid off. Less than 1% of the company's 12,600 Hartford, Connecticut region employees will be affected. However, those that will be affected are in Hartford, Southington, Windsor, and Simsbury offices. The company does not expect to notify additional employees in December about layoffs, but will wait until next year to cut more jobs. The laid-off employees will get severance as well as help finding other jobs inside or outside the Hartford. In some news from England, Insure Sport, which is a mutual set up to help sports clubs obtain civil liability coverage, has been suspended because other insurers are, quote, better placed to do the business. The mutual will be suspended from November 30th, leaving its 4,500 members to take up cover with its partners or on the open market. Insure Sport was set up by the Central Council of Physical Recreation, the CCPR, and Perkins Slade Insurance in 2006. Policyholders will not be renewed. Existing policies will remain in place. The head of finance at CCPR said, "The fact is that the sports insurance market has recovered from the events of September 11th, and it's a much more friendly place for sport than it was 6 or 7 years ago, and that's good for our members." The gap which existed for civil insurance in the sports sector has been filled again. The Royal Bank of Scotland, which is waiting to take up the British government's biggest bank bailout offer, abandoned its full-year profit forecast this morning. This as credit market losses continue to worsen and bad loans being reported rise. Royal Bank of Scotland fell as much as 9.5% in trading in London today after the finance director said the bank wrote down £1 billion during the month of October. This against assets tied to Lehman Brothers and Icelandic banks. It took $2.2 billion US of markdowns before accounting adjustments in the third quarter and warned that fourth quarter credit losses probably will be even higher. The Chief Executive Officer, Stephen Hester, said the latest charges coming on top of almost £6 billion in the first half, show that the bank has too much risk and may have a full-year loss. The UK will end up owning about 60% of Royal Bank of Scotland unless investors buy some of the £20 billion of stock it plans to sell later this year. The chief investment officer at Rathbone Brothers, who manages $21 billion in assets, says it doesn't look good for Royal Bank of Scotland in the fourth quarter, and we would expect that as we go into next year, the impairments will continue. Warren Buffett's Berkshire Hathaway company owns 2 more insurance companies today after completing a deal with White Mountains Insurance Group. Documents filed with the Securities and Exchange Commission yesterday show that the 2 companies consummated their deal that was announced several months ago on Friday. It was announced back in March, actually. Berkshire traded 1.6 million shares of White Mountains stock, valued at about $800 million, for Commercial Casualty Insurance Company, International American Group, as well as $708 million in cash. Berkshire still retains a little over 89,000 shares of White Mountains. Both of the insurers Berkshire obtained are managing existing policies only until they're paid off. They're writing no new policies. They're run-off business. Today is Election Day in the United States. The polls have been open now in the U.S. for about 5 hours and 38 minutes. Already, however, in the contest between Senators Obama and Senators McCain, we have received 11,000 reports of voting machine difficulties around the country. And as usual, there seem to be problems emanating in Columbus, Ohio and Cleveland, Ohio, which has been the scene in most presidential elections of voting booth irregularities. Both candidates voted early this morning, Senator Obama in Chicago and Senator McCain just about right now because of the time difference in Phoenix. Senator Obama is spending the rest of his day at his home in Chicago. Senator McCain